How's it going, everyone? It's Sam. Today we're talking about Rocket Companies, or RKT stock. We're going to go through what I think about it, their financials, when I would buy it, and why it's a pretty exciting company that has a lot of disruption. So we're going to go through all that. If you guys like this, please leave a thumbs up. That's the only thing I ask. Also, though, if you do want some free stocks, you can check out the link down below to WeBull, where you can get 3 free stocks if you deposit $100. Halfway through the month, they're going to end it. So definitely check that out if you wanted to get that, because it is a pretty good deal right now. So Rocket Companies had their IPO this year. They shot up pretty quickly to about $31 a share, and then has slowly come back down. You can see that the intraday high is actually almost near $35 a share. Now they're sitting around $21.85 after market hours. Now, what is this company? Well, they have several different companies underneath them, such as Rocket Auto, Rocket Loans. They have a lot of these companies that you would recognize the name of, and if you want to search them, you can see a little bit more information on them. But their main part of their business is Rocket Mortgage. So this is a very interesting company because they have been able to sell a lot of different mortgages this year, especially with a low interest rate environment, but they're able to take advantage of their disruption. So they're able to disrupt the mortgage business by not having quite the overhead that a lot of these traditional banks have. So this is a very interesting article. You can see that the single biggest expense for mortgage originators is commission payments for loan officers. So I worked at a bank for 2.5 years, and these mortgage originators get paid very well. So you can see here the typical loan officer will get paid anywhere from 0.5% to 2% of the loan amount. So on a $400,000 loan, they could get anywhere from $2,000 to $8,000. This is very expensive. And with Rocket Mortgage, their app works with the borrowers, so they don't need someone that is there to get all the correct documentation. That's basically what mortgage originators do. They go back and forth to determine what they need and then get it from the client. But with Rocket Mortgage, they're able to do this all via their technology. So this is a huge savings for them. You can see that this translates into a profit of about 4.79% in the second quarter of 2020, compared to what Mortgage Bankers Association, or the MBA, estimates that the normal typical mortgage banker would get about 1.67% in profit. So a lot more profit going to Rocket Mortgage. So towards the end of the video, I will talk to you about some of the potential risks of this stock, and then also some of the potential benefits of this stock right now where we're sitting in the economy. So I'll go through that towards the end, but I think it's important to kind of get an idea for what analysts are saying. So of course, I only give this a grain of salt because analysts can be wrong also. You can see that the average target price is about $26.54. This is off of 14 ratings. Now, they have 5 people that are saying it's a buy, 9 people that are saying it's a hold, but they're saying on the high end, $35, on the low end, about $19 a share. So even if we just hit that average rating, that is a nice price increase from where it is now. That would be about 20% or so in price increase. Now, looking at their financials, it is pretty impressive what they've done. So over the last couple of years, they have been able to increase their revenue from about 4.2 billion to 4.3 to 5.2, all the way up to 10.1 billion. And they're doing that with a significant amount of net income. Over the last 12 months, they've had about $4.8 billion worth of net income. If you remember, this is only about a $42.6 billion stock, so that puts their PE ratio right around 9. So this is much lower of a PE ratio than a lot of the other IPOs that we've seen this year, and a lot of the other more tech-based companies that are disrupting different sectors. So if you look at a lot of the different stocks that are really well known right now and are getting a lot of attention, they have very high PE ratios compared to this. Now, they have a pretty good balance sheet too. They do have a pretty good current ratio when you look at their cash and cash equivalents and trading asset securities. Together, it's about 4.1 billion, and their total current liabilities is about 4.9 billion. So not fantastic or anything like that, but nothing that causes me great concern, especially when you consider that they have about 4 billion in total receivables right now. Now, they do have earnings coming up soon. So this is something that I'm going to be paying very close attention to. I want to see what they're going to do in their next earnings, because it is Tuesday and they're reporting this at 4:30 p.m. Eastern, so they're going to have the results earlier than that. But I want to see how they've reacted to the pandemic, how they've been able to conduct business during the reopening of America. So Q3, we really reopened a lot of America and a lot of different businesses. So I want to see how they did during that. And this has been a really good time for Rocket Mortgage for 3 different reasons. First of all, a lot of people don't want to go out and about. So even just going to the bank, a lot of people don't really want to have to do that when they're fearful of their health. So Rocket Mortgage has benefited in that way that you can do this from home. Second of all, they have a very low interest rate environment right now. The Fed has kept rates very low, which is good because a lot of people are refinancing. I mean, I worked at the bank and we had a huge number of refinances because people are going from 4% interest rates down to 2.5%. And this is a significant amount of savings. And then the third reason that Rocket companies and Rocket Mortgage has done really well is the fact that mortgages and just homes in general are much more expensive than they were even a year ago. When you consider the fact that usually interest rates and the cost of homes work in an inverse relationship. So when one goes up, one goes down. When one goes down, one goes up. So interest rates are going down, mortgage and home prices are going up. So that really helps Rocket Mortgage because they're able to cash in on the increased cost of housing. So that is something that I have been considering with Rocket companies and Rocket Mortgage. That's something in the forefront of my mind. Also, one thing that is good is the fact that the Fed has talked about how they want to keep rates very low until the end of 2022. They probably won't look at even raising them until then, and I could see that being pushed back even further. So 2 years of really good earnings for Rocket, that's going to be really important, especially as we move to a more online society. I mean, I worked at pretty much a $10 billion regional bank, and we were just instituting the ability to open new accounts online, and Rocket Mortgage is able to do full mortgages online. That is really ahead of the curve compared to a lot of other companies. Now, I could see an issue with Rocket, and this is the main risk factor I see with Rocket. If we have another pandemic or a shutdown or something, but now it actually affects people. So we had so much stimulus, we had so many different programs before that helped people get through it, that if we see some kind of decrease in the economy and the ability of people to buy new housing and want to move, I could see that being an issue for Rocket. Now, whether that's offset by the fact that people don't want to go out to banks and refinance and get new mortgages and then Rocket's able to capitalize on that, I'm not sure. But I'm going to pay very close attention to their Q3 earnings because I might be looking at buying in. It is a very low PE ratio and it's pretty exciting. Now, let me know your thoughts on Rocket Mortgage in the comments below and Rocket Companies. Let me know if you are buying it or selling it. Thank you guys for hitting the like button. Thank you for checking out WeBull too. If you guys get those free stocks, you can sell them and then buy into Rocket Companies. So that's a pretty interesting idea there. Also, I did a video the other day on a penny stock that ARK Invest was buying and how it's disrupting the 3D printing industry. So you should definitely check it out here because it's very interesting. Thank you guys, and I'll see you in the video in just a second.